Hi, we're here with anyoption.com to talk about a trend trading strategy using 5 and 30-minute trading charts. Now, to take full advantage of this strategy, you're going to need some charting software, but don't worry, they're available for free online. You can find them at places like Bloomberg.com, Investor.com, and the one that we'll be using here is freestockcharts.com, which has a really versatile platform and that's pretty easy to use and free. Okay, so we'll switch over to our freestockcharts.com platform so you can see how this strategy works. Now, what we're looking for here is to find an asset that's trending in a direction, one particular direction, and we're going to compare it in two different time frames. One first in a 30-minute, and then in a 5-minute time frame. Now, this particular asset here, we're looking at the United States dollar versus the Singapore dollar. For the convenience of this video, and as you can see, there's a pretty strong trend here, but we want to look at this a little more scientifically. So to get a scientific reading on the trend, we're going to use what's called a moving average. All right, so we just click Add Indicator, and then down here we have moving average, apply to price history, and what we want to do is set the period at 100. Why 100? Because if you check most of the trading literature, you're going to find references to 100 SMA, which means 100 simple moving average. And because it's so popular to use the 100 period, it sort of turns into something of a self-fulfilling prophecy, because since all the traders use it, that's what the market ends up following. You can modify some of these parameters, but that's only really recommended for advanced traders. All right, so now that we have our moving average applied to the chart, we can see it's going down, and then we look at the 5-minute chart and we see that it's also going down. And this is basically what we're looking for with this strategies, that we want to have both periods moving in the same direction. And as you know, when you're trading, the trend is your friend, and this strategy is your friend also. So once we've confirmed the downwards trend, now we can start entering the market at the appropriate time. So what the trend is telling us is that the market is going to continue moving in this one direction for a period of time. And what we want to do is look for periods when the market comes back up. So since we know the market is going down in this case, we look for times when the market's going to come back up, doing the normal fluctuations, and then we sell at the top of these peaks as it goes along. And this this means we take advantage of these short moves that the market has while it's continuing to go in its downward trend. So basically, you're playing the law of averages here. So when you're expecting the market to go down, you buy puts. The same principle applies if the market were going up. If you see the market's going up, then you wait for, if the trend is going up, you wait for the market to go down a little bit, and then when it has a little turnaround, then you buy a call. All right, now you're not always going to have this convenient, the first asset that you're going to be looking at is not going to always have that convenient trend with both time frames trending in the same direction. So usually what traders do with this strategy is that they'll go through a series of assets. You know, if you're trading currencies, they'll start with, say, the euro dollar, which is the most liquid one, and then if that doesn't have the two trends in the same direction, they move on to the next currency, say the Japanese yen versus the dollar, until they find this particular setup. These setups will last for, anywhere from a few hours to maybe sometimes to a couple days. So that gives you several times that you can get in buying options, especially if you're looking at options that expire once every hour. Now, the time frames here and the moving average is calibrated for options that expire from anywhere from every half an hour to every hour, which is ideal for anyoption.com. And this system works just as well with stocks as it does with currencies and commodities. It's best with very liquid assets such as stock indexes, but it can still be applied for individual stocks, like if you're following Apple or Boeing or something like that. So anyway, as you can see, it's pretty simple to use. Hopefully this helps you get more of your trades to end up in the money. Thanks for watching and happy trading.